So many of you have asked me to do an analysis on Nike stock. It's down over 45% year to date, which is pretty crazy for a brand, for a well-known brand really like Nike, which has a lot of brand loyalty and, it gets a lot of profit and a lot of premium on the things that they actually sell. So they have much higher margins than really other kind of companies. But Nike, is down over 45% year to date. And over the past months, actually, on the earnings report, the stock, it's just flash crashed from $95 all the way down to $84. And I actually had some put options on the stock before earnings. It was mainly because of the whole exports with them and the dollar, because it's really strong, and I thought it could affect their revenue growth, which it actually did. But again, I'm not short the stock anymore, and I think there could be some value in Nike. So in this video, which is always a short video for me, I don't like doing 25-minute analysis, which is something I can say in 8 or 10 minutes, and I could not waste people's time, and we could actually determine if Nike could be somewhat of a buy at those prices, or if we maybe need a kind of a lower price for us to have better risk reward on a stock like Nike. So I hope you enjoy this video. Now, looking at a basic valuation on Nike, now it's trading pretty close to 26 times earnings. Now, this is really not bad if you compare it to the history of Nike. It traded in its entire history or over the past 10 years, as low as around a 20 PE and as high as 85 PE, with a mean of 36. So at a 26 PE, again, you're buying it below the mean, which is really not bad at all. But this is not enough for us to determine if Nike is a buy or not. Now, looking at the income statement, which is something I really didn't like much at all, we can first start with the revenue growth, which increased 4% to 12.7 billion compared to a prior year, and around 10% on currency neutral basis, which to me is, is BS in my opinion, because they just grew 4%. They grew 10% if there was no currency movement, but there was currency movement. And a company like Nike with such exports, in my opinion, they should have some kind of hedge on the currency, in my personal opinion. So they didn't have pretty much any hedge, I believe. And this is why there was such a big difference between 4% to 10%, which again shows me that the management did not do a good job in kind of, managing this whole thing. Now, this has really surprised me also pretty much. And this is the gross margin, which decreased 220 basis points to 44.3%, driven by elevated freight and logistics cost. Now, okay, this one I can really understand it, okay, the gross margin went down. But selling and administrative expense increased 10%? Really? To me, this is just, it shows me how incompetent the management is. And it's hard for me to say it because, they did a pretty good job in the history of Nike. But now, from the things I'm seeing, it's not like we've been hit by a black swan or anything. This would have been easily expected. And if the company like Nike actually expected something like this to happen, they would not have increased, selling and administrative expense by over 10%. To me, this is really not a good sign at all, and I didn't really kind of like it, I just didn't like it at all. Now, looking a little bit down more around the inventory for Nike, which is, up over 44%. Now, this is not only because of kind of lower demand. They actually said they have sustained demand, that the demand is high for their products, all right? This is mostly because of the in-transit inventories. But what really shows me with Nike is they only grew 4%, and this was, with kind of strong demand, as they said. They said our demand remains strong. Well, what if we have weaker demand in 2023 from the energy crisis in Europe and many places around the world? From a stronger dollar, everything there is much more expensive. And Nike is a global brand. I don't personally believe people kind of would be just going and buying Nikes like they were doing, in kind of early to late 2022 or 2021. So I believe, the revenue growth is going to slow down more, which could tell me that Nike could have some issues in the future. And again, I did not like the response from the management by increasing, selling and administrative around, 10%, which to me is, I just didn't really like it at all, especially with such an environment that we're in. I think they could have managed it a little bit better. Now, looking a little bit at the balance sheet, again, Nike has a pretty amazing balance sheet. Current assets 28 billion. It's much higher than the current liabilities of around 11 billion. Long-term debt is around 9 billion, but they have around 7.2 billion of cash. So it's really not bad at all. And Nike is a free cash flowing machine, which I believe could be sustained in the future, even though we might experience lower demand. So my whole argument is Nike said that their demand remains strong. Now, I think all of us can know from what's happening with the Apple phones when they pulled up on the production, from what's happening with Best Buy, people not being able to afford kind of buying those TVs, well, it's eventually going to come to Nike. So if they only grew 4% with high demand, how much could they even grow or even decline with lower demand in 2023? Which to me, I didn't really like at all. But again, looking a little bit at Nike, I mean, it's an amazing company. Looking at the return on capital, it's average between 31 all the way up to 35%. And around it averaged pretty much between 25 to 30%, which is a high return on capital, which is really contributed to the kind of compounding growth for Nike. It returned over 15%, CAGR for over 10 years, 332%, which is a pretty amazing return for Nike. And I believe this kind of growth will continue, but only if we pay the right price for Nike. If you overpay, then you might only experience maybe 5 to 6% compounded annual, not 15 to 20%. All right. So now I'm going to get into the valuation model to really determine, despite all those bad issues with Nike and all of the good things we have, is it a buy right now, or if we should maybe wait for a better price? So this is my valuation model on, Nike. All right. Now this is 46.7 billion. This was in 2022. Now in 2023, I expected them to grow only 5%, just like they're growing now. Now, why did I expect that? Mainly because 2023, in my opinion, is going to be worse than 2022 in terms of gas prices, in terms of, the fuel costs and freight costs and all those things. And maybe Nike doesn't have the pricing power to actually offset all those prices. So I believe Nike could even decline in revenue in 2023, but I could be wrong. Therefore, I did not put their average revenue growth, which was around 8 to 10%. I put in only 5% revenue growth in 2023. And then I put in 8% revenue growth, which I believe is more than fair for a company like Nike. I'm not going to put 15%. I think 8% is fair. All right. Now at the net income margin I chose is 12%, because looking at the history of the company, they grow from 12%, 10%, 7%. So they grew as high as 14.7% in terms of net income margin. So again, I chose an average of 12%, which I believe is fair for a company like Nike. Now using an average of 12% net income margin, I got around 8 billion in net income in 2027, so around 5 years from now. Now the PE ratio I chose is 30 PE, although I believe this could be a little bit on the high end, but again I chose an average of 30 PE as Nike deserves some kind of a premium, mainly from the brand loyalty, the high return on capital, and many other things that Nike actually has. Now using a 30 PE, the upside is only around 72%, from 140 billion market cap today to around 240 billion, or around 11% compounded every single year for the next 5 years. Now, if someone wanted to be a long-term investor of Nike, I don't believe this is a bad price to get in. But in my personal strategy, I like to at least double my money over the next 5 years. And then after I do that, then maybe I decide if I want to keep the stock to compound the growth, or if I want to, sell the stock. I find another double that could maybe double in the next 3 to 5 years. And in this valuation model, Nike cannot double over the next 5 years. Now, the only way I could be wrong is if Nike trades back around the 35 PE, although the average in the history of the company is 30 PE. So in my opinion, 5 years from now, I don't believe Nike is going to keep growing 8%. Maybe it's going to just grow 5 to 6%. Therefore, I believe, a 30 PE is pretty fair. And using pretty fair numbers, I only got a 72% upside over the next 5 years. Now, in this case, I personally rather buy maybe a company like Google, actually, under $100, than a company like Nike. Again, if you want to be a long-term investor of Nike, it's not a bad price to get in. You could get maybe 10 to 11% compounded, which is not bad at all. It's still beating the average 8% return of the S&P. But in my personal strategy, if I can't double my money over the next 5 years, I don't really open a position. So therefore, Nike to me is not a buy right now. Now, if I can buy Nike stock for around $60 to $65 per share, that to me would be extremely interesting. And many of you are going to say Nike will never get to $65. Well, if it doesn't get there, then I'm just gonna, find another opportunity. That's why my name is a patient investor. I put in my fair price. If it gets there, I buy. If it doesn't, I just let it go and I just find something else. There are thousands of stocks in the stock market, and I'm not going to feel bad if I missed on, Nike or anything like that. But the most important thing for me is not to overpay just because I want to FOMO. So this is my kind of video for today on Nike. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.